With a higher than normal dividend yield, exceptional dividend growth, and solid share price appreciation, I believe SCHD has established itself as the king of dividend ETFs, but I don't want you to just take my word for it. So in this video, we're going to be taking a deep dive into SCHD. We'll be learning exactly what SCHD is, learning how it's performed historically, and even projecting how it will perform in the future. But before we start the breakdown of SCHD, we need to briefly discuss what an ETF is. Exchange traded funds, or ETFs, are essentially low-cost funds listed on the stock market that you can buy and sell just like stocks. Simply put, ETFs are funds that track the performance of a basket of assets. This means that dividend ETFs like SCHD are ETFs that track a basket of dividend-paying stocks. Now, as we can see, the goal of SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. It's important to take note that it's stated before fees and expenses because while some index funds have high fees and expenses, SCHD only has a 0.06% expense ratio, meaning that for every $10,000 that you invest, your fee is only $6. The fund also seeks to provide a straightforward, low-cost, tax-efficient way of investing. It can serve as part of the core of a portfolio or complement a well-diversified portfolio. It tracks an index focused on the quality and sustainability of dividends, and it invests in stocks selected for fundamental strength relative to their peers based on financial ratio. And those last two elements that we mentioned are huge because, this means the fund is seeking out companies that have strong fundamentals. So with this in mind, let's look at some of the top holdings for SCHD, which is one of the best ways to understand the fund. And if you're a dividend investor like me, then many of these top holdings of SCHD are probably recognizable. Broadcom, stock ticker AVGO, is currently their largest holding, making up around 4.54% of the fund. This is a company I've talked about on the channel before, and I hold it in my personal dividend portfolio as well. Just a quick glance at the company shows that they have a solid starting dividend yield, good share price appreciation, and a phenomenal history of dividend growth, which makes it an ideal candidate to be in SCHD. As we can see from the top 10 holdings, just like AVGO, many of these companies have a solid starting dividend yield and a history of dividend growth. I personally own 5 of these top 10 holdings. If we break things down by sector, we can see financials accounts for around 22% of the holdings, industrial 16.5%, technology 16%, consumer defensive 13.5%, healthcare at 10.8%, and the other sectors are all less than 8%, and this just goes to show how well diversified this fund is. Now let's dig into the dividend a little bit more. SCHD has a solid starting dividend yield of around 3.34%. This is quite a bit higher than the typical S&P 500 fund, such as SPY, which is currently yielding around 1.55%. And if we jump over to Seeking Alpha and look at SCHD's dividend grade, we can see they get an A+, and that's going to be for a few different reasons. Like we already mentioned, they have a solid starting dividend yield of 3.34%, but it's even more impressive when you put it up against the median of all ETF's dividend yield, which sits at only 2.05%. So while that is impressive, what's even more impressive is the dividend growth they've seen over the past few years. If we look right here, we can see their 3-year compounded annual growth rate is 14.1% compared to the median for all ETFs at only 1.95%. That's absolutely unbelievable dividend growth, and we can see that's the case for the 5-year and the 10-year dividend growth rate for this company. One thing you will notice is that their payouts aren't consistent and they fluctuate over time, but overall their dividends do grow on a year-to-year basis. We can expect this to continue as long as they focus on holding quality dividend growth companies. To better understand how this fund has historically grown its dividend, I built out a quick spreadsheet model. If we come over here, we can see that in 2013, SCHD was paying out a little over 90 cents in dividends per share. At the time, they were trading at around $29.21, which means they had a dividend yield of a little over 3% at 3.09%. With a one-time $1,000 investment, that would give you around $30.94 per year in dividend income. Move forward to 2022, and they paid out about $2.56 per share. Assuming that in 2013 you bought in at a price of $29.21, that would mean that your dividend yield on cost is now 8.77%. That's a massive dividend yield on cost, and go ahead and keep in mind that that is without reinvesting any dividends over that time period. If you were to reinvest dividends, it's likely closer to 10%. So that means from your $1,000 investment, you're now making close to $90 a year in dividend income. Keep in mind that this history of really great dividend growth has also come with really solid price appreciation over the last 10 years. Finally, let's go ahead and project out how SCHD will perform in the future. And to do this, we're going to be using the historical data you can see right here. And we can see on average, SCHD has grown at around 11% when it comes to their price appreciation, and SCHD's dividend has grown at a rate of around 12.36%. So let's go ahead and build out our variables for this financial model that we've built. If we come over here, you can see we're going to go ahead and assume a price growth rate moving forward of 11.06%. We're going to be assuming $1,000 monthly contributions. We're going to go with a dividend growth rate of 12.36% and a starting dividend yield of 3.35%. And that will be the variables we use to build out this model and project 30 years into the future. So when we jump over to our analysis, the first thing we're going to look at is our yearly dividend payouts. And we can see it starts out slow, but it builds up rapidly. After 10 years at this rate, we would be receiving over $10,000 a year in dividend income. So it takes around 10 years to get to $10,000. If we move just 5 years forward, we can now see that our dividend income is over $26,000. So in just half the amount of time, we more than doubled our dividend income. If we look at it in a 20-year time period, we would now be receiving $63,000 in dividend income. And 30 years from now, we could be receiving $346,000 a year in dividend income. And that's all coming from a fund whose starting dividend yield is only 3.35%. And that's what's so impressive about this fund, because if we look at the yearly portfolio value, we can see this is going to appreciate quite a bit as well over time. After just 10 years, our portfolio value will be over $275,000. After year 15, it will be sitting at $667,000. Year 20, it will be at $1.5 million. And year 30, we would have a total portfolio size of $7.385 million. And I know some of you are probably thinking, well, yeah, maybe that's true, but we did just have a decade-long bull run. And that brings up two more points that I want to make. If we jump back over to Seeking Alpha, we can see SCHD usually outperforms the broader market when we are in bear markets. We can see over the past year, the S&P 500 is down about 8.14%, while SCHD is only down 0.97%. So this is a great hedge against bull markets. But let's go ahead and see how the fund would perform. Let's say if it performed at a price growth rate of around only 8% and a dividend growth rate of just 9%, a little bit lower than it has over the past decade. If we jump back over to our analysis, we can still see after 30 years, our yearly dividend payouts are going to be over $150,000. And if we scroll down, we can see our yearly portfolio value after 30 years is still going to be over $3.5 million. So in conclusion, we've learned that SCHD is a well-diversified ETF that focuses on holding quality companies that have solid fundamentals and focus on increasing their dividend payouts over time. The fund has a low expense ratio and typically outperforms the market during periods of economic downturns. The fund has better than average starting dividend yield and provides safe, reliable, growing dividends. There's no doubt about it, SCHD is the simplest way to build a dividend portfolio, so if you want to put your investments on autopilot, this is a great place to start. If you'd like to be able to download the spreadsheet used in this video, then you can head over to my Patreon page at the link in the description. The stock research platform Seeking Alpha, which is what I used in this video, is currently offering a 50% off discount at my link in the description, so be sure to check that out if you're interested. So that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.